you better take a look at it.
Thanks. How's it, guys? In this video, I'll be walking you through a 50 pip trade setup that I took earlier this week using my Don't Strike trading model. You just saw me enter a buy limit order, the euro US dollar right there, with about a 21 pip stop loss. And right now you see me set a take profits for 50 pips at the 116.72. And this right here is the moment where that buy limit order for the euro US dollar is triggered, and now I'm long on the euro US dollar with a 21 pip stop and a 50 pip take profit. This trade setup was also shared with my Discord community where I share my real-time trading activity. So the framework that I'm entering into each day with, trade setups that I take when I enter, how I'm entering, how I'm thinking as I'm entering, and all of my trade management as well. So all of that gets shared in real time in that Discord community. I also want to add that the account that I'm showing in today's video is different from the one that I've been showing in past videos. The reason for that is that the account that I was trading earlier was a prop firm account and I was trading with the funded trader. But for some reason, they've gone dark and they talked about some migration thing going on. So I've been waiting for my new account details, but I haven't gotten them. At this point, I assume they've just gone dark, which is typical prop firm behavior these days. That's the risk that we take by subscribing to these platforms. We don't know whether these people will be there tomorrow or next week, or whether we're just wasting our time with them. And clearly, for me, if they don't come back, I've wasted my time. So I'm looking for another way to trade, probably fund a personal account if I can. But for now, it'll be this Pepperstone demo account that I'll be displaying my trades with until I sort myself out in that regard. I then draw out a line segment, which is now highlighted on the screen, and that is basically a 5-minute time frame, bullish order block mean threshold. And I used that as drawdown protocol during the trade, thinking that no 5-minute candle in the euro US dollar should close below that level in order for me to still have confidence that the trade idea will pan out. And in the case that any 5-minute time frame candle does close below that bullish order block mean threshold, then I will just cut the trade in half to take a smaller hit in the case of full stop out. But other than that, that level should keep price from closing below it on a 5-minute time frame, and if it's hit, it should repel it and begin to produce some bullish price action. As you can see right there, the market does give me some drawdown that retraces back down to the bullish order block mean threshold. So at that point, I'm waiting to see if it'll close below that level, and then I'll cut the trade in half for a small loss. But if it doesn't, I'll just let it go and let the trade breathe. And then ultimately, you can see that it does turn around and it repels that level very well and upholds the reason why I use that framework for drawdown management. Now, the framework behind the trade idea, once again, is my Don't Strike trading model, whereby I'm expecting a bearish London session expansion for the US dollar index after it ran out the Asian range high and set a possible high of the day between 3 and 5 a.m. Eastern Time. Then I got a 5-minute time frame changes the state of delivery that then confirmed that I could possibly seek the Asian range low and as much as the previous day's low for the US dollar index. Then I take that idea and flip it the opposite direction for the euro US dollar, because as the US dollar index goes downwards, the euro US dollar is going to be delivering bullish price action. So that buy limit order that I entered in the euro US dollar was based off of an institutional order flow entry drill using a bullish fair value gap after the framework of the Don't Strike model had presented itself as explained. At this moment, I take off about 70% of the position at about a plus 1 hour risk to reward ratio. And then at the same time, it's really nearing 25 pips in profit. So I take off that 70% for partial profit. I then raise my stop loss order in order to trim some risk off of the trade. Once again, at this moment, I raise my stop loss up above break even to trim some risk off of the trade. At this point, I take off another 20% of the position off as the Euro US dollar runs above its Asian range high. And then I raise my stop loss up further to lock in a bit more profit. I then leave the remaining 10% of the position for my take profit order if it's willing to give it to me. Ultimately, the market produces a retracement that comes for my stop loss order, giving me a positive stop out and taking me out of the position. Leave a like and subscribe if you enjoyed seeing my perspective of how I approach the markets, and leave a comment in the comment section of what type of content you'd like to see me produce in the future. Over with that, that's it from me, and stay safe.